Good morning, everybody, and welcome to another edition of Bleeding Crypto's Morning Brief. Today is Saturday, February 12th, 2022, and I just want to give you guys an update on the video that I posted a couple of days ago. If you haven't seen that one, guys, I really suggest you go there, listen to that one first. You can even put it on playback speed of 1.5 and cut down the amount of time. It's only a 12-minute video. However, if you want to play it back faster, you can view it, you can hear it much quicker. But the reason I say that is because it really puts everything into context. On when you look at a video, guys, that somebody makes, and you look at it a few days later, I think that's a very validating way to see if the person is on the right track. And the reason I say that, guys, I'm watching Twitter this morning, and there's still people that are just giving some really bad advice. And I'm just like, wow, it's just incredible that people have such an unrealistic view of the market. All they want to do is tell you what you want to hear, which is why their likes and their followers are like out of control. And 9 out of 10 times, it doesn't play out at all. And yet, that's okay with people. As long as they get that glimpse of hope, that's all they really want. So if you want a glimpse of hope, do me a favor and turn off this video because you're a fucking moron and this doesn't apply to you. However, if you have half a fucking brain and have a little bit of intelligence and want to know the probability, and I'll give you both cases. I'll give you a case to the bears and I'll give you a case for the bulls. Right now, the bear case is outweighing the bull case, but I can give you a scenario for both markets. But I'm not going to sit here and tell you that it's just bull. It is definitely not bull. Bulls are not in control. They have not been in control in a while. And this move up here has nothing to do with the bulls. So I just want you to understand that. And you won't be able to understand how this had nothing to do with the bulls until you listen to the previous video that I made a couple of days ago. So let's go back to, actually, you know what? You see this yellow line? I want to remove this yellow line from my chart. So let's go back and just review that real quick. Just so that we could, you guys could remember what that was. In the previous video, I showed you how this was a volume divergence, a bear divergence. And we had, at the time, we had 3 green weekly candles. And we had 3 green volume bars, diminishing volume. I told you guys this is never a good sign. When I see this, if I'm in the market, I'm going to lock in some profits. This more than likely, the probability is we're going to see some more downside. So I just wanted to point that out before I remove this from here. Now, I also want to make one thing clear because I know people are going to get really confused when I just said that this had nothing to do with the bulls. The bulls brought it up here. However, this was a given. And again, you have to listen to the last video on why we knew this was going to happen. It was late to the game. And when you listen to the other video, you will know why. If you haven't listened to it, that's your problem. I'm not going to cover that again. Again, I don't like feeding into stupid people. You need to do your own research as well. And if you're not willing to put in the time, then there's no reason why I should explain further. All right, so let's go down back to the daily. And this update really is not going to be too much. There is nothing's really has changed. What we have going on right here, we continue with that rejection off the 100 EMA here. We have now lost the 9 EMA, as you can see, and we're down to the 30 EMA. Now, this structure here could be a bullish structure. So there is a case for the bulls a little stronger than there was on the last video, because this flag pattern here, this pole and flag, and going down to the 30 is a very typical bullish market structure that I look for on when we're on the uptrend. I'm looking for bear flags. Typically a bull flag. Typically a bull flag will come down either by a wick or by candle onto the 30 EMA before shooting back up. So unlike my last video where we didn't have these two metrics here, there wasn't much of a bull case on this market structure without these two. Now that these two are here, even though it looks a little bearish, it actually has, I can actually make a case. Again, guys, I am not a perma bear. I am a realist. And I'm going to tell you what I realistically see on the chart at the time that I'm analyzing it. And to be honest with you, if you want to know my bias, everyone says you should remain neutral. That's bullshit. We're human. We're all going to have a bias whether we want to admit it or not. My bias is bull. I want to see Bitcoin at $1 million fucking dollars. I want to see it. However, the road to get to $1 million is going to be a very bumpy road. And when we get to BTC, not if, but when we get to a $1 million BTC, I want to make sure that I made money along the way and that I kept my capital and that I'm actually going to benefit from Bitcoin at $1 million. Imagine getting chopped up the whole way up there, and by the time you get there, you have nothing left because all you did was waste your time listening to people that only want to give you one strategy, only want to give you one direction, and want to give you false hope. You're going to get chopped up. I know from experience. I've gotten chopped up plenty of times until I said enough is enough. So for the time being, yes, this is a bullish market structure. Overall, I still think the bears are more in control because, like I mentioned, this was an expected move. We double topped on this support, on this resistance, but this bullish flags opens the door. This bullish flag opens the door for a move to the upside. Now, I'm going to make the case first for the bulls so that you perma bears for you perma bulls that have tears in your eyes and are fucking have a quivering lip, so you guys can be a little bit more content. I'll address you idiots first. So let's go ahead and do this. Let's look at this first. Look at what's going on here in the immediate vicinity above the price action. Look at what needs to happen to break this. This is not going to be an easy task for the bulls. You have the 300 EMA. You have the bottom of the support of the prior support box. You have the 100 EMA, which you already got rejected twice. You have the 200 EMA, and you have the top of the box. This is going to be a very tough area. And typically when we have a convergence of so many resistance areas above price action, we typically see this. And this is what it's going to have to take to break through this. Breaking through this with small little indecisive candles is unlikely. It could happen, but it's unlikely. Now, typically, how do we break through these areas? With a big green dildo. That's how we break through. With a nice big green candle, we'll break through it. And no, we're not going to go right up to 52,000. When we break through it, make no mistake about it, we will come back down and back test. Now, there's going to be a lot of areas here it can land. I want to tell you, I wish I can tell you I know exactly where it's going to land. I can tell you the most probable place it's going to land is going to be on that 200 EMA. And it'll probably come back down into the inside of this box. And that's where it's going to get really interesting. Because after a push like this, and we do a back test into this area here, will the bull still have enough ammo to bring it to continue it and not letting it get smacked back down in this below this area here? That's going to be crucial, because if she gets smacked back down below this bottom of this box, the probability of continuation becomes much, much lower. But if we break through here and we can back test and hold, I would say at least, I won't be too concerned if a wick is inside this box, but if the candle can at least close above the 100 or any place above here, I would be more bullish for a continuation. Like I mentioned in the previous video a couple days ago, once we break through here, then I am going to flip to a bullish sentiment, and I'm going to start scaling into my alts and then back into the market. Till then, I am still waiting for targets to the downside for that bullish market structure that I talked about, and I showed you guys that bullish market structure on the previous video. I can do it again, but if I do that, I am going to, I don't want to do that, because then the lazy ass people who don't want to listen to the first video are just going to get a free pass. And you guys know how I feel about that. So if you want to know the bullish structure that I'm expecting to see for a reversal, go take your lazy ass back to the other video and watch that first. So if you guys that are perma bulls, this would be a case that I'm looking at. Now, let's look at the MACD. You see that MACD? You see that curve? Again, I have to give it to the bulls. This structure here, this structure of the MACD and this structure of the market structure on this candle pattern, it goes hand in hand with a bull flag breakout. The only thing we need is, typically before we see a bull flag breakout, we are going to see, we're going to need a MACD to close the gap with the cross indicator. And what it normally does, when it comes back down here and touches or gets near the cross indicator, that's when we see a slingshot effect. Right now, it's still too separated. I'm not worried about this diminishing volume on the volume oscillator, because that again is a very typical move right before a flag breakout. And remember when I said about a touch to the 30? That's a very likely scenario that we see right before a bull flag breakout. And we still have some area here. Look, this area here should be enough to close that gap, get us closer to the cross indicator for a breakout. All right, so I think I gave the bulls a good scenario, a realistic scenario on what to expect. If we do this, guys, it doesn't mean that we're reversing. It does not mean we're reversing. I'm giving you guys a realistic point of view on what can happen based on what I've seen happen before in the market. But here's the thing. Imagine this, guys. You guys are go on the other side of this. Okay, don't put yourself as traders. Put yourself as market makers. Okay, and market makers know that 99% of you guys on Twitter are idiots. They know that. It's not news to them. It's not a news flash, and they know that you idiots like to trade on emotion. So they, first of all, do not post shit on Twitter. So if you think a market maker posts anything on Twitter, no, they don't. They don't give you any advice. They don't post any charts. They just like to sit there and watch market sentiment. That's it. They see all of the bullish tweets here, and they're laughing their asses off. They're like, okay, all right. And what do you think would happen if they put a nice big green dildo like this into the market? Honestly, what do you think? How would you feel? How would you feel? You don't have to admit you're an idiot. Just for a second, make believe it's the guy next to you. Make believe you're the smart guy and the guy next to you is the idiot, which in reality really isn't. But anyhow, let's just have some fun with it. You know that the probability is that 99% of the people are going to think that this is a signal that we're back in the bull. And what are they going to do? They're going to load up. They're going to load up on the market. Okay, so now remember, you're on the other side of this. What would you do if you're trying to take somebody's money and you put in this here? It's obvious, right, guys? They're going to take it right from you. And the funny thing is that when you see this, you ignore everything that you have seen or learned to the left. And what I mean by that is There's a guy who put a comment on Twitter on one of my posts that, oh, he doesn't know what he's talking about. He doesn't have a crystal ball. Actually, I do have a crystal ball. Again, you are an idiot and you don't understand the potential and you don't understand how to appreciate the crystal ball that we all have. You have it and I have it as well. And here it is. Look, for all you idiots that think you don't have a crystal ball, it's right in front of you. But you're too stupid to fucking realize it. You see all of this? You know what this is called? This is called a crystal ball. Do you know why? Because it tells you how the market makers like to fuck with you. It gives you a roadmap of their plays. This is like going to the fucking Super Bowl and having the opponent's playbook in your hand, and yet you're too stupid to read it and still lose the game. And everyone who's losing money is basically that person, is that team that's too stupid to read the rule book, the other opponent's playbook, and continues to lose the game. Look at the way markets react, and look at the way they take your money on the way down. And every move to the downside is the exact same thing. Here's a perfect example. The mid-cycle correction that we had, look at all of this. Look at all of this downside. Look at this nice big green dildo they put in here. Look at this. How many people just bought into here? Oh, we're turning around. We're going back up to 80,000. I told you. And they slammed that bitch down from 58,000. They nuked it. Fucking like what? I think it was like 50%. This shit was, oh, it was glorious. Yeah, 50%. They nuked that shit 50%. All of these guys, shut the fuck up. They won't even admit it. They're like, oh shit, here we go again. And it's the same idiots that are liking every post that talk about bullish scenarios because they got caught up here. And they don't want to hear the truth. They don't want to hear anything other than a bull case. And every time that we head down, it's never just one red candle. They're going to fuck with you. They're going to put in these green candles to fuck with you. Look, again, look at this move here. Look at these. This candle here was a $4,000 candle. Look, if you put your cursor over this candle and you look to the very top, it gives you all the stats of that candle. The O means open. It opened at $33,413.19. The H means it's the all-time high of this candle was $37,556.25. The L means the lowest point of this candle, including that wick, was $32,423.72. The C is for closed. The candle closed at $37,400 exactly. And the plus 39.88.31, that's the candle body itself. How much value this candle had. And the parentheses, it was an 11.94 move to the upside. That's why it has plus. Opposed to this one that has a minus, and it shows you the negative of this candle. So they put a $4,000 candle here, a 12% candle. How many people thought that was the reversal? And they bought, and then look, they bring her. This is the crystal ball. This is all the crystal ball you need. So when you move here, when you start looking at different possibilities, be careful. Yes, I, including myself, would get excited to see this. Because you know why? This candle will be one step closer to my confirmation. And that's the difference, guys. While your guys are buying in here and taking a huge risk, I'm not. If we go back up to all-time high, yeah, you have a better entry. Good for you. But you're putting in a lot of risk. And if you don't care about your portfolio enough and you want to just roll that dice, you're probably going to make more money in Vegas. You're taking on the same risk. You're no different. You're taking on the same risk as Vegas. I'd rather play it much smarter. I'd rather play it on good confirmation where I can start to scale in. Most of you idiots on crypto Twitter will go all in on a candle like this. You guys don't even bother scaling in. That's what's incredible. You won't even bother. You'll put everything 100%. I'm all in. Let's ride it. Diamond hands. And then your pussy ass are fucking crying when we come back down into here. That's that. It happens on every single downtrend. Every single downtrend. So why not wait? Why not preserve your capital? If you get knocked out of the game, guys, that's it. It's game over for you. Stay in the game. Play it safe. You're not going to get rich by next Thursday, but you are going to get rich if you play it smart and you wait for confirmation, and you will build that little by little. You will get there, but you won't get there without a portfolio. So, all right. So for the downside, guys, again, market structure is everything. I'm looking for that market structure that I talked about in the last video, and I think that market structure is still in play. So take a look at that. Take a look at that video. See what you think. We still have some time for the price to come down into the 30 EMA to get that bull flag. Now, if we break, when we break, if I'm sorry, not when, but if indeed this is not going to play out, and we break the 30 EMA and we drop below this 41,000 and we close below the 30 EMA, the likelihood gets very, very slim. Yes, I have seen flag breakouts happen underneath the 30, very rarely, but they have happened. But the probability diminishes quite a bit. So if we break below the 30, we close, more than likely, look, there's nothing but dead air. Nothing but dead air. Our next area of support before we go back down is going to be right there, right where my alert thing is. That's the next support, which is prior resistance, and then back to the scenario down to where I told you guys on the previous targets. I gave you guys 2 targets to the downside on the last video. So for those who listen to it, you guys already know what those are. Those 2 targets are going to be the ones to look out for. You're going to want to put orders, or if not put orders, at least watch it very, very carefully. If we lose a 300 EMA. Those are going to be most likely in play. The probability increases dramatically once we close below that 30 EMA. We only have 1 more EMA for support. That's it. After that, it's going to be an ugly ride down. However, that market structure that I talked about, it would get me very, very bullish. If we hit the first target, I'm probably going to scale in. I'm probably going to nibble in because here's the thing. If we get to the second target that I talked about on that video, we are most likely going to get a bounce. So if we get that bounce, that will give me a much more, obviously I would scale in at that second area. As I'm approaching my first buy-in, and those 2 areas weren't that far apart, I will then be pretty much at the close to the broke-even point. And if the market looks like it's going to continue, great. If not, and we're looking and we see more weakness in the market and we're going to be going back down, I have the ability to get out of that first trade and with very little loss. Because if I take the trade on the first target and then take it at the same trade on the second target, when that target starts to move up, I start closing the amount of percentage that I'm under on that first scale in. So it gives me the ability to taking a very minimal loss if I see that the market is weakening and we're actually, those 2 targets weren't the ones. We're going to go lower to other targets that I did not talk about in the last video, and I don't want to talk about those now because, like I mentioned before, there's a good possibility that one of those 2 targets may be the bottom. I don't know what they are, but I want to take it one step at a time. There's no point in talking about a $20,000 or $14,000 bottom when we have 10 areas of support above us, above that area. It just doesn't make sense. It doesn't make sense. I like taking it as data comes in. I like taking it one step at a time, adjusting my analysis as more data comes in so that we have a better view of what's going on. This isn't something, guys, that you can look at this chart and then right now, exactly where we're at right now, this is going to be applicable in 4 or 5 days. Why? Well, because in 4 or 5 days, we're going to have 4 or 5 more other candles. And it's going to be either this. Either those 4 or 5 candles are down here, which means it invalidated this, or they're up here, which means that the likelihood of going back up is much greater. So this is always moving, always fluid. We're going to be changing our analysis as more data comes in. And that's why I like using the higher time frames, because it's very hard to try to determine a long-term view when you're looking at an hourly chart. When you're looking at an hourly chart, it's nearly impossible to get a true sense of what's going on with the market. But when you zoom out and you're at a daily time frame like this, it gives you it's cleaner, a much better perspective of what's going on. And another thing that I did not point out in the last video, I did point this out in my private Discord group, is this trend line. This trend line here, guys, look at it. Look at this trend line. Topped out here. Every time you see a point hit this trend line, whether it's below or above it, you know what it does? It validates that trend line. It's just a lot of validation. And look at where we were. When we broke above it, we confirmed it. We confirmed it again. Again, we pushed up. We got rejected. And then look, we fell. Now we're back below it. Back below it. Again, I gave you a good scenario, but it is, you know what to look for now. For a bull case, this is the only structure that I see that can give a case for your bull bias. But I'm looking for a confirmation that this is not going to happen, and that's going to be the 30 EMA. Guys, I want to talk to you about one quick coin before I sign out. It's going to be Charge. Take a look at this. This is something that it's in DeFi, guys. It's in the decentralized space. It's not on TradingView. You can go to PooCoin or DexGuru. It's just one example of I'm not in the market on anything that's on TradingView at the moment, but I am on DeFi, and this is actually the only project that I am in right now currently in DeFi for a big reason, guys. Most people can't comprehend buying something that's on support. Most people like to buy big green dildos when it's at the top. They feel comfortable. They don't want to be the first ones to the party. They want to be the last ones to the party. And then when everybody leaves and they're staying there like, oh, hey, wait, hold on, what happened? I got my drink in my hand, I'm ready to dance. Where did everybody go? Well, the party's fucking over. Well, I like to be the first one at the fucking party so I can get the strongest drinks, the pick of the hottest women, and the freshest fucking food. I'm not gonna go there with fucking stale dip like most people do. Right now, guys, we are at support. We are at support. And I put a couple of areas here just so you guys can see the potential. Buying right now at support at the bottom, just to get to right here, you've more than doubled your money. Just to get to this area here, you almost have 300%. Here, almost 800%. Back to all-time high, you're looking at almost 1,700%. So it's just something that I just wanted to share with you guys. This is the only thing that I am in, that I'm holding at the moment I see a lot of potential. And this coin, guys, does not have a Bitcoin pair. And that is something that's really important that you guys need to understand. A lot of these coins in DeFi, they run on their own merit. They're not tied to Bitcoin. Most altcoins that are tied to Bitcoin, when Bitcoin drops, they drop automatically with it. Not this coin. And we've had the run-ups that we've had with this coin have actually been when BTC was going down. This thing was running up, and a lot of people can understand that. Well, why? I don't understand that. If everything goes down, when Bitcoin goes down, how come this is going up? Because there's no Bitcoin pair. This is a completely different space. Even though it is crypto, you have the potential. It's also high risk, so I'm not gonna fool you that that has low risk like Ethereum or Cake or BNB. No, but with that risk also comes a lot of reward. And depending on when you buy an asset, it's when you really can maximize your reward. So I just want to point that out for you guys. If you guys want to take a look at it, it's up to you. You can find it on PooCoin.app. If you haven't used it before, you probably just go to their website, and it's chargedefi.fi, and you can look at the contract, look at the docs, and they have the contract address in there, and you can plug that into your PooCoin chart, and then you can look it up for yourself, see if it speaks to you. If you don't think you can find value in this, don't buy it. Never buy it because somebody is telling you about it. Never do that. Only buy it if you see value. Because if somebody's telling you about this coin when it's here, likelihood is they want to dump it on you. But if somebody's telling you about a coin when it's here at the bottom, you should respect them a little bit more, because they're sharing with you a good opportunity. Here, they're shitting on you. Here, they're more than likely on your side. So it's just something to think about for this coin or any other coin. Always look at where people are shilling a coin to you. Always. Because that's going to tell you if they're going to shit on you or if they really want you to make money in this space. And a lot of the times, guys, most of the high following count Twitter accounts, they're shitting on you. And I think you guys could hopefully have enough brains to see that by now. How many people have bought from a suggestion from Twitter, and all of a sudden, a week later, you're down 50%. But you won't blame that guy that was shilling it, because ultimately it's really your fault, because you shouldn't have listened to him. So just keep that in mind, guys. The rest of the market, guys, is going to follow Bitcoin. There are always a few exceptions. There's always a few coins out there that have a mind of their own, even though they have a Bitcoin pair. And you know what comes to mind? This coin has been on fire, guys. This coin, Beefy, has been on fire. Look at this. Look at this. This has just been going and going and going. Think about, this is the inverse to Bitcoin's downtrend. As Bitcoin is going down, this is going up. Look, this has been an amazing run. Since Bitcoin started its descent, this has gone up 136%. 136%, while Bitcoin has been going down. So keep an eye on Beefy. A lot of potential in this coin. Beefy is a very reputable a staking yield farming platform that almost all projects in the Binance Smart Chain system are on Beefy. And I'm not sure if Beefy also does cross chains, because I'm not really in any other cross chains. I'm starting to go into Phantom, but I don't know if there's any coins there that you can stake from the Phantom network. But I do know in the Binance Chain network, it definitely is. I'm still new to DeFi, guys. I've only been in DeFi for a year. It's been already, I just had my 1 year anniversary in DeFi, and it's just been an incredible space to make a lot of money. It reminds me of the regular crypto market back in 2017, where you can throw money on just about anything and you're going to make money regardless of what Bitcoin is doing. So it's just a really interesting space. If you get into it, guys, just be responsible. Just nibble at it. Throw money you can definitely afford to lose. Throw a couple of thousand. Well, it depends on your portfolio. Just throw a small amount first. Make sure you understand how it works. Make sure you understand how decentralized exchanges work. I can't tell you how many people I read on Telegram where they will go into these coins having no clue. They can barely work 1 inch or pancake swap. And they end up losing money because they just don't understand the simple concept of how to use a decentralized exchange. So make sure you do your homework first when you go into the DeFi space. All right, guys, have a good day. Have a great rest of your weekend. And we'll see what the market has in store for us tomorrow with that weekly closing and the upcoming week. And with the world situation too, guys. Let's see if this this potential war between Ukraine and Russia, if it does happen, let's see what effect it has on on crypto. More than likely it's going to affect broader markets. And lately, the effect of broader markets have affected crypto. So it's curious to see if this time it's different, or if they're going to now use crypto as a safe haven, because this is kind of what crypto was invented for times of instability in the markets and broader markets, to be as a safe haven, like basically digital gold. So let's see if hopefully the war doesn't happen. I'd rather the war not happen. War is never good. A lot of innocent people end up dying. And it's funny how the politicians, they're never the first ones on the battlefield. They actually never see the battlefield. The people pushing for war will never send their kids to war or put themselves first. So let's hope that it doesn't come down to that. The last thing we need is another war. But if it does happen, we just want to be mindful of what it can do to the market. So it could that could be the catalyst for a much deeper correction in crypto if it doesn't go the way we want it to go. So again, I'm not hoping that we get war just to bring down the price and get a better price. I'm not saying that. I just want to make sure that you guys can pay attention to the correlation of what's going to happen to the markets, because I honestly don't know. It could go up, it could go down. We don't know that. But it's interesting to note those times of turmoil. We saw back here, look guys, look what happened back here. Right here. Look, we saw when the markets tanked because of COVID, it had a direct correlation with crypto. That's how we had this black swan event. This was all broader markets brought us down. This had nothing to do with crypto and everything to do with the situations, the world situation. Now we're kind of, fast forward, we're here today, and, there's talks about World War III. Well, will we get the same effect here? Will that be the catalyst to get us down into the 300 EMA? And the reason I point this out, the 300 EMA, is because, look, guys, let me show you something real quick. I'll let you guys go. The past two bull runs that we've had prior to this one, look, the 300 EMA was the bottom of the 2017 bull run. The 300 EMA, excuse me, I think I said 300. 300 EMA was the bottom of the 2017 bull run, and the 300 EMA was the bottom of the 2019 bull run, and it's what caught the drop of the COVID situation in broader markets. So now we're here. We're fast forward here. That's a huge drop, guys. And I'm not saying that we're going there, but if the markets do this and we follow the markets the way we did before, this is what I'll be looking at. This is where I would be looking at. I like to plan ahead, guys. I don't know about you. I like to have a plan in place. I like to look at different scenarios and the reason they happen. I think that's what a responsible analyst has to do. Whether it fits your bias or not, you have to be ready for potential. I have a saying in my Discord group. I like putting stink bids. I don't know if you guys ever heard that term, stink bids. Stink bids are areas in a chart that you think will never go there again. Never. That's way too down. But you know what? I've always had the habit of, if I have USDT or BUSD or whatever stable coin I have and it's sitting in my wallet, rather than leaving it in my wallet, I'd much rather put it into something secure in a very, very low target, just in case we get filled. Imagine you're here. Put it this way. Look, imagine this, guys. You're riding this. All right, look at this. You're riding this. The 2019 bull run is over. It's going sideways. We're going back up. You're at $10,000. You're going to bed, or you're going on vacation. He said, you know what? I got this stable coin here. Let me just put an order down, $5,000, 50%. And you tell that to anyone and be like, you're crazy, dude. We're not dropping no 50% on Bitcoin. You're out of your mind. That's not going to happen. Well, what's it going to hurt? What's it going to hurt on a low risk asset like Bitcoin or Ethereum that you put a target at 50% below? And look, you come back from vacation and you just were able to, if people are happy buying here, but they don't want to buy here. And that's my point. Most people don't like buying bottoms. They like buying this. So stink bids are something that have filled for me, not a lot of times, but when they do, it's a great feeling. And when you're in the hourly time frame, guys, and sometimes you'll see, I know back in 2017, Ethereum dropped in one of the exchanges down to, man, I think it was like 10 cents, 10 or 18 cents. And a lot of people got filled. I didn't get filled on that, but a lot of people got filled on that. And it was great. They woke up to like this incredible amount of profit. It could happen. You don't know people's situation. You don't know who's holding on what exchange. And guess what? They have an emergency. They have a death in the family. They need capital quick. And a market maker just says, you know what? I need to liquidate. I need to liquidate. And they have, and that exchange doesn't have enough liquidity or has the same liquidity as what they're going to be dumping. And guess what happens? You get a huge wick to the downside, and you may get filled depending on your back size and what position you are in that stink bid. You may get filled. Well, if you're here, guys, you're at 42,000. Okay, let's just for shits and giggles, you're going to bed tonight. Why not put a stink bid at 20,000 or it's 25,000? Let's just say just 25,000. You think that's never going to happen, and you wake up to this, you're not going to be upset. Trust me, you're going to be like, oh my God, I just got filled on $25,000 Bitcoin. That's going to be an incredible feeling. So that's something I like to preach to my students. Put bids that you think will never get filled. It's better than having dead money in your wallet. You never know when that can happen. All right, guys, have a good weekend.